May profits be upon you. I'm just going over some morning analysis prior to the New York session open at 8 o'clock Eastern Standard Time. All right, I'm just taking a look at Euro USD. I'm all over this today. I just want to keep my eyes on one chart today, and I'm looking at Euro USD. All right, so what do we see on the daily chart? We see that there was a break of structure here. Very important to note. Why? Because this tells us that price intends to go lower after a break of structure. You just look at the intent of price, and you just know that if it breaks a low like this, a structural low, that it intends to go lower. All right. So, and you just want to mark the expectational order flow. What is the expectational order flow? It's just follow the order flow, man. If price is heading down, making lower lows and stuff, and it breaks structure, you know that it is bearish. Okay, it's just bearish. And when we get a break of structure, you know that the market is bearish. This wick low, watch this. A very important point. If it wicks low like this is a snatch and grab for me, a smash and grab rather, for liquidity, as opposed to a close below this low point, that structural low, because this one for me has a stronger intent to go lower. It shows a stronger intent to go lower. And this one, when you see price go immediately up after breaking the low, it's not a convincing break, a convincing intent to go lower. You understand what I'm trying to say here? I'm trying to parse words. All right, so we're going lower. Right now, this is a full pullback for me. A full pullback is anything above 50%. All right, from the top of this impulse to the bottom of the impulse with the Fibonacci retracement tool, you'll see that it comes up to the golden ratio. All right, that golden ratio, you have to look that up on Google. All right, this is a highly frequented level. All right, and it's kind of magical. Anyway, I'm looking for that the pullback to come higher than the 50% because of this is the equilibrium point of this trading range. All right, this is the discount area. Below the 50%, higher is the premium prices. All right, of the trading range. All right, I wanted, if price is going to go lower, I want to take the premium price short. You understand? I don't want to take my short from down here below the 50%. I want to wait till it comes past the 50, and really preferably up to the 62% pullback level on Fibonacci retracement tool. All right, so we've accomplished that. Now we can get rid of that. Okay, I said get rid of it, doggone it. All right, so we've done that. The deal is we didn't break this low. All right, so what does that mean? What does this mean to me? If the job of a low is to break a high, all right, that's it. All right, when you fail to do that, that means you become, let me get this color right. That means you become liquidity. You become a point for liquidity, for a price to come and get you. This is a weak low because it didn't make a new high, didn't break the trading range high, right? So for me, it just says price is probably going to get ran here. This low is probably going to get ran. Doesn't mean it's going to get ran immediately. Just means it's going to get ran at some point because it's a weak low. All right. Now, what about this? What about this high? All right. Failed to make a new low. So what does it become? Liquidity. All right. And we see price came back and took that liquidity out. Got it? Took it out, and here we are. Now, what am I looking for now? I'm looking for what the response, what the reaction will be to this area. because we've already taken out the high. All right. After this full pullback, we failed to make a new low, took out the high. Here we are on this pullback. On its own, there is an impulse and a correction here. From here, this is the impulse, and the top of this is the correct is where the correction starts, this pullback. All right, we've already come back to the 618 golden ratio. We've already come back and beyond that. That's 786. If this candle closes in this fashion, and we got what, 9 minutes? Wait a minute, not 9 minutes, 9 hours. I'm sorry, because we're on the daily. We got 9 hours. If it closes in this fashion where we see this big rejection, hey man, we're gonna take out this high. You see, there is relative equal highs that were left behind here. This is a magnet for price. This is they want the market makers want to take this out because there are a lot of people who took shorts from here. Okay, and there's a lot of stop losses to come and get for liquidity. All right, see this rejection here. If it holds, let's go down to the 4 hours so we can get a better look at the price action. All right, let's get rid of all those lines. Okay, I want to see, what do we have here? Aha! See, what I'm looking for is a strong demand zone, and we found it. We found it here. Okay, just look at it. Just look at this. Look at the low here. Let me get it. I like blue. All right, just look at the low here, and you can see that these are. I'm looking for an unmitigated demand zone. All right, and this one was this. Watch. Let me draw it this way. This one was mitigated here, right? Again here. All right. And then it comes up, comes down, and then up. This is why I like, oh man, this is why I like this that zone. Come on, man. You're embarrassing me in front of company. This is why I like this zone, because it's not this wick area has demand in it, and it has not been mitigated yet. Even coming close here, sorry, even coming close here, it has not been mitigated yet. So I'm looking at this hard. All right, price comes down into this. This was inducement to get people to go long first, but that's not really important. You know, marking what's inducement and what's not, whatever. What you want to do is be adaptable. You want to adapt to the market. So what I want to see is a rejection like this, right? You see the wick left behind, all right? And this candle trading range has not come into this wick area, all right? This is going to probably be a demand, the new demand forming a chain of demand, okay? And that's what you want to see. If this, when you start to see a chain of demand being formed, all right, like, you could, come on, man. You could, you could form it in retroactively. You can, come all the way back down here. You can see there's a chain here, and that gives you an idea of what the order flow is. All right. If price holds here, if this demand does not get tested, all right, if this demand does not get tested, and we see a break higher. If this candle closes bullish, I'm looking for price to come and take out these relative equal highs here, and then the big dog, the big relative equal high up top. I'm looking for price to do something like this. All right. Up until in the short term, because this is a 4-hour chart, up to the 4 term, I'm looking for price to come up here. All right. Do we have a unmitigated supply zone up here? No, we do not. Even with this one, there's a wick right here. You got to look at these little things. There's a wick goes into the supply here. All right, the supply in this wick. So yeah, we'll get a reaction here. We'll get a reaction here more than likely. All right, but it won't be up here. I'll be looking more here. That's where I'll be looking. All right. So if we get a long position here, this is where I would take my TP, taking out the relative equal highs. And this is where I would take the TP, I'm looking here, and I would look on the 15-minute to enter a good trade here. And, you know, we might have missed that. We might have missed it, but I'm looking at 8 o'clock. And it's 8:02 now, so I gotta go. I just wanted to share this with you, and I will see you in the next video.